Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. So let's take a look again on the gold market analysis. So as you know, in general, our longer term view suggests that gold should remain under pressure a bit longer, and in today's fundamental report we have trying to take a look at some details of the current pullback that we see on the markets across the board, trying to take a look at the recent non-farm payrolls release and in general what we have in an economy. And we see that everything actually is going with our trading plan. The positive numbers that we have on the non-farm payrolls release suggest why the reaction in general was downside on the gold. Just because it means that Fed policy makes no negative impact yet on the economy, at least as investors suggest by far. And which means in turn that Fed could keep going with the tightening policy. It has room to do this without hurting its ability to hurt the economy, which suggests some pressure as interest rates will be rise more, suggests the pressure on the gold market. And last week we see some bounce on the stock market, and other markets as well. And today we have tried to find the reasons. And actually, we have found a few moments that is vital for the gold market. Some moments we have also discussed in our Forex market weekly report yesterday and on the gold market as well. So in fact, currently we see that nobody buys the new issuance of the government debt in the United States. For the 3 months in a row, the net balance, which means issuance minus repayment, stand near zero. So Fed Reserve and the United States Treasury has no actually assets to finance the budget deficit, the trading deficit that the United States currently has on record high, including the reissue of the debt at the redemption. So they need to issue the new debt instead of to replace the LD1 that is coming to repayment, but they do not have money to do this. That's what statistics shows. And we have made the suggestion, it's actually based on the analysis of some economists. It's also think that probably will happen, that they intended to use the United States Treasury cash account on the Fed Reserve, in the Fed Reserve, to finance the lack of liquidity, the lack of funds to cover the gap in the budget. And just take a look. It's a miracle. If you'll take a look at the dynamic of the United States Treasury account on the Fed Reserve, you will see that precisely in the recent week, it has dropped from the 957 to approximately 780 by the end of the May. This 150 billions is precisely the amount that financial system and corresponding the market have got from the Fed, from United States Treasury accounts, and that has led market to find the bottom. At the same time, this money hide the really big problems in the United States economy. Some of them I have said about the bond market, which makes the visuality that it seems that recession hardly possible, that the Fed policy is highly effective, as inflation is slowing down, the Fed was rising rates, but without any hurt to the economy. That's what we will get from this overall visuality of the statistics, and providing this liquidity, Fed keep rates low without trying to postpone the big problems in the economy when the rates is coming out of the control, and this cash will be exhausted. So it means that you could just control this chart that you could find on the Fed Reserve official page. As you can see, the link here is monetary policy, credit and liquidity programs and balance sheet menu, and then going to the recent balance sheet trends. You could use this, you could use this chart right here to control what's going on with the US Treasury account in the Fed. Once it comes into the zero, you should know that the big problems will appear right on the next month when these funds will exhausted. And that will be absolutely dramatic moment. Collapse will happen. It will be very bad thing. That in turn will become the turning point for the gold market. This is actually what we need to wait for. Approximately this should last, well, somewhere until autumn. Maybe Fed will try to extend it until the November elections. Approximately this money should be enough to until this moment. So that's what about some fundamental background. So the fact that you see currently the positive statistics, and you could see that massive opinions, common opinions that everything stands good, so everything behaves well. Don't be deceived with these statements and opinions. In fact, everything stands absolutely different. So, speaking on the technical picture in the short term period, taking all together with this fundamental background that it's mostly negative currently for the gold, because gold will be in the same trends that all markets understands. Initially, when this bounce has started, we suggest that market probably could trying to reach at least the 19 even area. Its OP target is just because it's bouncing up from the strong weekly support. And this chance still exists. But at the same time, in this moment, we have to be very careful with taking the long position by the few reasons. First of all, on the daily chart, we've got bearish engulfing pattern, which might become the warning sign, and it could mean that maybe upward direction is over and this market will keep going lower. This is bearish moment. Second, weekly trend has turned bearish, and although we have chance to see this A, B, C, D completed, still risk stands relatively high, and we need to get additional confidence on the support areas where we intend to take the long position, trying to get the bullish patterns before a position taken. Because take a look on the 4-hour time frame chart, gold market hasn't broken through the predefined support. If you remember, we on Friday said that might be 1856 or 1845. Market should not show the deep retracement just because it hasn't reached the COP yet, and deep retracement before reaching the COP, it is not really a good sign from the bullish point of view. So market is coming on extension, especially when the CDLA extends a bit stronger than AB. It's just irrational behavior. The market just hasn't reached the COP, turns to the deep retracement. Well, it will be bearish. And in the current circumstances, since the sell-off stands relatively strong, we need to get more confidence with getting some bullish patterns around this area before taking the position. Because level is okay, it's a strong level, and before position taking, we need to see the trend turns bullish here, or better to say on the hourly chart, and market is forming some bullish reversal pattern. In this case, we could try to take the long position. If we get no patterns, no trend shifting to the bullish side, we just do nothing and see what will happen next, because chance really exists that market could keep going lower. On the weekly chart, for example, last week has become the indecision week, some high wave pattern. That's another reason why I'm a bit worried about taking the long position, and this is the reason why we need pattern before taking the position. So on the hourly chart, this market also has completed, as you can see, steep ABCD pattern, but here we still do not have any bullish reversal patterns as well. So just need to see what will happen. Maybe some dynapple patterns might be formed, because in general action here is thrusty, looks good, and maybe double repo or something like that might be formed. That's actually what we intend to do on the next week. Just watching for major supports right here when the market hits them, and watch for bullish reversal patterns where the market will be able to stay on a bullish course, will be able to proceed higher. this is the major points for coming week.